Grow your practice, grow your wealth, grow your impact. Find out how to spend less time in the dental chair and more time on the things you love.
Welcome back to the Dental Wealth Podcast. Glad to have you back. Gosh, it's always a pleasure to be in front of this microphone. But I want to talk to you today about a text that I got. I want to read this text to you. Eric, in your opinion, which stock market shares are good to buy right now, like oil or Delta? So now, look, that's a fair question, right? Hey, what do you think when you look at a stock market? Hey, what stocks are good to buy and not good to buy? But I want to talk about it in context for a moment, because I think what can happen. By the way, I get these texts all the time. I'm reading you that text. It could be, I get so many texts about, should I buy oil right now? Should I buy this? Should I buy that? And I want to kind of tell you how you should look at all investments. And this is the way I would look at it. So there's 3 different classifications if you want to use a baseball analogy, just something simple to understand. There are bunts, there are base hits, and there are home runs. What is a bunt then? Okay, so let's talk about these in context. So bunt. So a bunt is, because what was just asked of me, by the way, was, Eric, how do I make a home run? How do I knock it out of the fences? That's what that question, that text is not hey, how do I make sound investment advice for the next 30 years? That was not about sound investment advice, by the way. It was, Eric, do you have a tip for me that could help me in some way? Now, I'm not a stock picker by trade. That's, but obviously I spend a lot of time in financial markets and financial, in every single way, whether it be business or equity or whatever. So I got a lot of questions about that. So let's just talk about what that looks like then. And a bunt is the safe money. We should all have safe money. And in fact, it's one of the most important things to do. And I'll argue with you that the person who asked me about the home run stock typically hasn't covered their bunts. And if you got a paper, write that down. It's a good thing to write down. The bunts. This is what happens when COVID happens. And in fact, one of the things that I've been telling doctors forever was winter is coming. Winter is coming. I've said it on this podcast. I've said it over and over again. The winter is coming. And if you do not have access to capital, and I've said on this podcast, hey, I don't love money in a 401k as a business owner. I think it's a poor decision. You need access to capital at any given point. You don't know when you need it. And so you better have access to capital. You better have ways to get capital. So the person that is talking about this home run, now that, by the way, it's more exciting to hit a home run than a bunt. Can we all agree? Definitely more exciting. It's do you want to take the driver out or the putter? I want the driver. I want to knock this sucker right down the middle of the fairway. There's a thrill. Outside of making a 30-foot putt for the golfers, they can relate to me. Some of you are wishing I'd move away from a golf analogy, but the putters, you guys can go look, if I make a 30-foot putt, that's a big deal. But if you make a 4-foot putt, are you really jumping up and doing the Phil Mickelson jump, or you just kind of just going, whatever. But if you knock that sucker up, and a little bit of that's ego, right? It's I was able to buy oil at this price and sell it at this price. I'm such a financial mastermind. Yet I know, because I look at people's financials all the time, that hey, they don't even have their bunts covered. People need more bunts. What is a bunt? Bunt is having a credit line and having money on it. Not utilizing it all, but having, I always tell people, I've had multiple credit lines on homes. I've never put $1 on it. I've literally, since I think the first time I got a credit line on a home, I think I was 20, maybe 26, 27, $100,000 credit line on my home and never put $1 on it. Not $1. Why? because I needed access to capital. Interestingly enough, when, there was an issue in our family with postpartum depression, and we could have maybe needed that $100,000. It's having access to capital because we don't know if COVID's going to happen. Great business owners, great individuals have access to capital. Do you have access to capital? Do you have money in savings? Are you using, whether it's some kind of investing app or I'm not a big fan of mutual funds, but utilizing your advisor or using some type of advisory services, whether it's some type of robo investing and you've got money in the market, whatever, you've got to have access to capital, savings accounts, permanent life. Hey, people knock permanent life insurance, but the funny thing about it is, like, when people, I'll tell you a story about permanent life insurance. I had a guy one time come into a meeting and he put in a policy with Northwestern Mutual back in 1972. And I said, you have that whole life sitting over there. How much money's in it? He said, I remember he's from Texas. So if I sound like I have an accent, it's because I'm telling it through a Texas. I think he literally was wearing a big ball cap or a big base cowboy hat. And so he's sitting there and he says, I put that in place in 1972, and Eric, I ain't paid $1 on it forever, and I doubt maybe there's a few $100,000 in there. We opened that thing up. We called Northwestern Mutual. There was $723,000. Boom. Right? Cool thing about something like that is it feels like a bill, and then all of a sudden one day you wake up with tons of money. Right? And so there are tools, whether it be CDs or savings or brokerage accounts or whatever your money, and I'm not talking about money sitting aside for retirement. That's different. That's completely different. I'm talking about the money you're sitting aside so that if stuff hits the fan like COVID, then you've got access to capital. That's a bunt. It's never sexy. It's not going to make you a 42% rate of return. It's not going to double in 3 years. You don't go write books about it. You don't even tell your family you got it because it's really not that sexy. Like I was talking about whole life. Nobody brags about their whole life policy. Not really, unless you work for one of those companies or something. And nobody brags about their CD. Like, nobody has ever walked down the street with talking about their certificate of deposit. Like, it's not a conversation that we, but we need bunts, don't we? Problem is sometimes people don't cover their bunts. So when people get sick, when divorces happen, when pandemics happen, when injuries happen, they're not ready. So we got to cover our bunts before we start trying to smack this damn thing over the fence. Like, let's cover that first. I think that would be smart financial positioning. Wouldn't you agree? That's smart financial positioning. So the first thing I'm going to tell you to do is, are we covering our bunts? Then we go into these base hits. What's a base hit? Base hit is your dental practice. By the way, that's a base hit. It was never meant to be a home run. This is the thing you're counting on. Look, if you hit a home run, that's great, but that's not the point. The point is to make a base hit. You're trying to get to base. And so base for most people is having their enough money sitting aside. And I'm not talking about access to capital if something happens. I'm talking about retirement. I'm talking about, anyone who listens to this, I'm not a big retirement fan. So I mean, having access to large amounts of passive income and liquid capital in the future that you can count on. That doesn't disappear overnight. If the market has a 30% dip, you don't lose your house. You don't lose everything you've got or lose your fixed income, which I'm not a big fan of. So it's like this situation where you put yourself in this base hit category where you've got, you focus on your base hits, because then you say, look, this is what I'm counting on. I'm counting on what's sitting over here. For those of you who have put money in qualified funds, I'm counting on my qualified funds. I'm counting on selling my business. I'm counting on selling off this piece of real estate or having passive income from that real estate. That's a base hit. Do not mistake base hits for home runs. They're not the same. They're not the same. You don't get overly risky with money that is your base hit money. That's a huge mistake. So we look at these two first categories and we go, well, the first thing you got to do is make sure you got bunts. And here's my question to you. Do you have your bunts covered? And if you don't get to talk about home runs. You can, but it's financially irresponsible. I think you got to have your bunts covered. I'd get my bunts covered first. I'd make sure that I have access to capital in case something happens. So when a COVID happens, you go, when everybody else is pulling back from marketing, when everyone else is freaking out, when everybody's worried about payroll, when everybody's worried about every little thing they're worried about, you are not. You go, I got this. What a good feeling. I got this. Like, I'm not worried about it. I'll be fine. I mean, it was great to be able to look at clients and go, look, you'd be fine for like 30 years. Like, it's okay. That's a great feeling. Or 6 months or whatever the number is. But I never had to look at anybody that I work closely with and say, you're in trouble. So we cover our bunts first, and then we move on to base hits. And we say, okay, I got to make sure that I'm doing all this thing Eric tells us to do. I got to invest in my practice. I got to make jumps on the sigmoid curve. I got to be innovative. I've got to look at my marketing. I've got to look at everything I'm doing. I got to look at my team, and I got to make sure I'm breaking through the organizational ceiling. I got to be doing all the things I'm supposed to be doing with my business because, hell, I'm counting on it. I'm counting on it. Because I'm counting on it, then I got to make sure it works. Then we move on to home runs. See, when you got the base hit taken care of, you go, I got this. Like, I'm fine. I don't have to worry about anything. And then when you got the bunts covered, you're saying, hey, look, if I need short-term cash flow, I can pull it from here. Like, if I need something happens, I've got my bunts covered. I got access to capital. I've also got all my assets moving in the right direction. So when I get to the point of needing it, don't worry, I'm going to be good for the long term too. Now let's swing for the damn fences. Now you get to go, hey, let's go swing for the fences. Now here's the thing about swing for the fence money. You got to be okay with losing it. You got to be okay with losing it. That's the thing about swinging for the fences. Don't send me a text about what stock should I be looking at if you can't lose that money. And here's a better, and don't be, well, I'm only going to put $30 into it. Well, then I'm not sure you're even swinging. Okay. If you wouldn't confidently put $100,000 into it tomorrow, you're probably not so confident about it, are you? There's sometimes we should swing for the fences. I always tell people, like, I bought Apple in 2009 at like $71 a share, and I sold it in the 600s, right? Now, I didn't know that for a fact, but I was pretty confident that I could swing for the fences on that one. And I did. And I won. Now, here's the thing. If I lost all the money I put in Apple, I wouldn't have cried about it, but I had pretty good instincts that was one I could swing for. And there's factors. I'm not saying we swing with our eyes closed. We should certainly look at the factors that go into a home run. And like I was just called the other day about, hey, look, by the way, it happens to me all the time. Hey, Eric, this happens all the time. Not just, I get a lot of questions, but hey, I got a business idea for you. That's called a home run, right? Because my here right now is my mothership. It's my base hit. It's what works. It's what I can count on. It's what I can predict. So anything else than that, what I call a shiny diamond or a home run. It's swinging for the fences, and wait, that might or might not work out, but I certainly don't count on it. So when we go to buy stocks at a time like this, by the way, stocks have mostly rebounded. A lot of things have rebounded, but here's the thing. We can talk about dollar cost averaging, and we can talk about what makes the most sense when it comes to stock market investing. And this is not a stock market investing show. It's a financial wealth show. It's a how to create wealth in your life, and wealth being from the standpoint of financial success and relational success and every other kind of success. Because trust me, it doesn't matter if you have all the money in the world. If you're not happy, then it won't really matter anyhow. It will not matter. Trust me, there's plenty of lonely billionaires. So I want you to look at it like this. And this is what I want you to take from this episode. Like, I want you to take this. When I make a decision, is it a bunt? Is it a base hit? Or is it a home run? When I make financial decisions in my dental practice, is it a bunt, is it a base hit, or is it a home run? Many of you are treating marketing like it's a home run and it's a damn base hit all day long. It's predictable. You can count on it. You know it's there. Like I'm telling you right now, you can predict market returns. And some of you treat marketing like it's a damn home run and it's not. It's a base hit. Don't call things a home run that are a base hit too. Because if you think of that as a home run when it's a base hit, it might scare you away from things you should be doing. It's a good analogy just to think about your financial life that way. And so I want you to think about this. I want you to, when you get done listening to this podcast, here's what I want you to do. I want you to sit down and I want you to you can use Excel, you can use a piece of paper, whatever's better for you. And I want you to write down where all your assets are and all your investments are. And I want you to classify them: base hit, bunt, or home run. And I want you to do it that way. And then it's going to free you up to make better financial decisions. And you might realize that before you ask me for a stock pick, that you haven't even covered the bases. Guys, thanks for listening. Hope you enjoyed. We'll talk soon.